Hi, this is Zach here with the US Chartbreakers here at Zach's Traders Cafe. It is Tuesday, the 3rd of October. Starting off with the S&P, where we still don't have a great look to this market. The head and shoulders from back in June, and obviously the failure with a gap down through the neckline there, 43.30, below 43.30, the risk of a move down to that old October uptrend line, 4200, which is also the area of the 200-day moving average, the black line there. And that seems to be where we are in terms of a 43.30 to 4200 range. Moving on to the stocks, which are by definition generally in a better place than the S&P. First one is BTC Digital, and here we've had unfilled gap to the upside, bear trap island reversal. In fact, so we gapped down in August, gapped up to start or to end actually September, and above the 200-day moving average there around the $4.12 area, looking for up to $6 as soon as the end of next month. It might even be the end of this month if we are lucky, and only well below the $3.50 area, really delaying the upside scenarios. That's the top of the gap and also the old gap from back in August. Next contender is Biorestorative, and here you can see that we've got a falling wedge breakout. Good bullish divergence there as well in the RSI window, so slightly lower lows for the end of September, but RSI pushing higher, and that was a good indicator of a move to the upside. And here above $1.75, looking for up to $3.50 at the 200-day moving average, and also at the top of that broadening triangle from back in August. But the key here, holding that $1.75 zone. Beautiful chart coming up next, and it is Cellectar Biosciences. Here we had the big unfilled gap to the upside at the beginning of September, V-shaped bull flag breakout, and the breakout level there around the $2.80 level. Above that, looking for $3.40 at the top of that rising trend channel from back in April. So a decent turnaround there on Cellectar. Next up, rather obscure contender, and it comes in the form of Expion, and here Expion 360, a falling wedge breakout, well, just a tentative one anyway, through the $4.50 area, and what we'd like to see now is an end of day close through the 50-day line, $4.80, to take us up to as high as $6 by the end of next month. Nice bear trap rebound from below the rising 200-day moving average around the $4.20 mark. Next up is a situation which is also looking pretty bullish, to say the least. Here we've had the unfilled gap to the upside at the end of last month, further gap higher as well, and the current situation is that we're hoping that the shares will remain above the resistance of the 28th of September. That was around the $3.60 area, and that means that leaves us looking for a target which I will reveal, up to $5.50, hopefully by the end of this month. But the key is holding above that $3.60 or 50 area, maybe, to allow a bit of wiggle room. On to a stock which seems to have a lot of social media interest, at least, or interest on social media, Fingermotion. And here we've got this rising trend channel from the end of June. Support for the shares since then coming at or just below the 50-day moving average, which is now rising, as is the 200-day line. Looking for the shares to hit the $8.50 area, hopefully by the end of the month, especially while we remain above $6. That was resistance prior to the break to the upside. So above 6, looking for $8.50 on Fingermotion, and hoping actually for an acceleration to the upside. Moving along to a stock which is called Immix, and here we had a nice breakout yesterday to start the week, $3.80, the old resistance, and so now the view is above $3.80, looking for the shares to hit the top of that rising trend channel from back in May, as high as $6 by the end of next month. The 50 and 200-day lines rising quite nicely now in parallel. A new name for the chart breakers coming up, and it's Kineta. Here we've got a nice break through the 200-day moving average, the first time since back in December, so the first time this year, obviously. Old resistance, which was broken through $3.70, and above that we're looking for $6.50 by the end of this month. So maybe a bit ambitious there, but that rising 50-day line and the puncture of the 200-day moving average a decent double signal there. Nvidia next, one of the stocks of the year, maybe one of the stocks of the decade actually, but here we've broken that line of resistance from the end of August. That was versus around the $425 area, and that's breaking through the 50-day line at 450. And we're trying to break through that. End of day close through $450 could take us up to as high as $520 by the end of next month, while we remain above the mid 420s. I don't think many people have heard of this stock as compared to the situation at Nvidia, but here we have Ocuphire, and here you can see that it's a bear trap from below the May support there. That was around $3.60, and above $3.60 looking for $4.50 as soon as the end of next month at the top of a broadening triangle from the beginning of August. Moving along to an interesting setup here at Petiq. Here you can see that we've got a rising trend channel from the end of February, top of that channel heading to $24, and we're expecting $24 as soon as the end of this month, while we remain above that broken August resistance line and the latest gap at $20. So relatively simple mathematics there. Double bounce for the RSI off neutral 50. That also helps give confidence that $24 will be seen sooner rather than later. On to Pitney Bowes, and the picture here is of an unfilled gap to the upside, W-shaped reversal, breaking that neckline of the W at 349, around the 349.40 cents area, and above 340 cents, $3.40. We're looking for $4.20 at the top of a broadening triangle from back in April. Time frame on that hopefully by the end of this month, given the unfilled gap to the upside and the fact that it completes the island reversal after the gap down that we had back in August. On to the last two. The first one, a rather famous name, Tesla. And here, we've got this uptrend line there from back in April. For that trend line there at $240. Above that, we're looking for a resistance line target from back in July as high as $275. We want to see as many end-of-day closes above the 50-day moving average at $250 as possible in the meantime. Hopefully we can get to $270 plus by the end of this month. Last stock of the day is Ultralife, and the picture here, unfilled gap to the upside, sort of some familiar type of setup here. We already had a massive unfilled gap to the upside back in July, and so this is the third one now, and above the resistance line from September at $10.20, looking for $13 by the end of this month. A relatively simple picture there after the double RSI rebound at neutral 50, which normally is a decent continuation signal. That's it from me today. More updates tomorrow.